reminder, I'm Krista Gardner. I'm a partner at SEK in our York office. I split my time pretty much 50-50 between government and not-for-profit work, doing audits, consulting, and outsourced CFO services, and also training, which is a lot of what we're talking about today as far as, what really are government accounting essentials, things to know, and how to interpret your financial reporting. For those of you that weren't on part one, the part one video is available on our website. And then also after today, we will be sending out another survey for any of your comments, questions, or ideas for future webinars. Please make sure to fill that out, and the video, today's video will be available usually within about 24 hours of that survey going out. So what I'd like to start with this morning is we're just going to go over a couple of reminders from part one, just because they're the base of what we're going to get into today of financial analysis, understanding your financials, budgeting, and what to do with that information. So a couple of reminders of things that we talked about last time. Basis of accounting. This is truly important to understand. How does your governmental entity record its transactions? Are you on the accrual basis of accounting? You record revenue when earned. You record expenses when liable. Are you on the cash basis of accounting? Essentially, you're not going to record revenue until it's received. You're not going to record an expense until you pay it. Or are you what's called the modified cash basis of accounting, which is a combination of those two and is different for each entity. It's defined by each entity essentially on how you modify that cash basis of accounting. Oh, one thing I did forget, the chat feature is working. Please feel free to enter any questions that you have, even particular if there's anything from the first video, the first in the series that we did. If you have any questions, I'll try to hit those as we go today. And if I can, I'll definitely make sure to follow up with you. Continuing on from last time, we talked about fund accounting and what it is. So governments account for our resources and related activity in separate funds. We kind of look at those as like little mini businesses or mini programs. And so all of those funds have to stand alone, meaning they should always be self-balancing, they stay in balance. We want to make sure that all of the activity is in each correct fund. And essentially, if we're debiting a fund, there should also be a credit, making it stay in balance. These different funds, there are some that are required by law, but then others can be elected to be kept depending on the activity of your entity. What activities you have, what programs you have, what services you provide, etc. And along with these funds is different types of funds. And we got into these in a lot of detail last month, but just a reminder, you've got your governmental funds. These are going to be your general fund, your special revenue funds, which are like your liquid fuels fund or state highway aid fund. You might also have like a streetlight fund. You might have a special recreation fund. Capital projects funds are also a governmental fund. Proprietary funds, these are truly those mini businesses. So they do act like a business because they are providing a service to people. These are going to be your enterprise and internal service funds. So if you have a sewer fund, a water fund, a refuse or trash fund, those are all going to be these proprietary type funds where you are charging a user to receive a service, as opposed to those governmental funds, which are really based on your normal governmental revenues of tax revenues, et cetera. And then you're providing those basic services to your residents, road work, police, fire, et cetera. And then the last type is a fiduciary fund. So just a reminder on fiduciary funds, this means that the governmental entity has custody or is responsible for funds, but it's really not money or funds or activities that are the government. So this is going to be something like a pension fund, or there could be a scholarship fund that essentially the government holds the money in the bank or on hand, but essentially there's someone else or there's other information that determines how that funding is used. Interfund activities. So we went through a couple of examples of this last year, but just again, some reminders. Due from transactions. So these are interfund loans that will be paid back. So this could be the general fund is owed money from the sewer fund, or the capital projects fund is owed money from the general fund. So this is when we're going to record that activity, essentially saying this fund owes the other fund money, and then that stays there and accumulates those transactions until the actual cash is transferred. You can do this each time you have a transaction, or some entities will do this monthly, where they'll essentially keep track of all of the maybe bills that the sewer fund owes the general fund for, and then at the end of the month essentially transfer that money, which clears out that due to, due from. And then you would essentially restart with the next transaction that there's money owed between the two funds. Transfers between funds, this is interfund activity that is not a loan. It will not be paid back. This is one fund giving money to another fund. So this is the general fund transferring money into the capital projects fund based on a budget, based on a funding source that came in, based on a project that's happening. This could also be other funds that essentially you've decided to move around how you're covering expenses. And so this is not going to be paid back. This is literally just a transfer from one fund to another. And the key here is the due to, due from, and interfund transfer transactions. They happen on both funds. So you always want to make sure, again, if you have two funds involved, general fund and sewer fund, the entries on both of them need to keep those individual funds in balance. So you would have a transfer in and a transfer out and another transaction related to it on both of those funds, or the same thing with a due to and a due from. You would have another side of that transaction on each of those funds to keep them in balance. We talked about fund balance. This is one of those questions that we always get, what really is fund balance? Or fund balance means cash, right? Which can be correct, but often is not. And so fund balance really is taking our assets minus our liabilities. If you are a governmental entity that is strictly cash basis, and on your balance sheet, you just have a cash account or multiple cash accounts, and then you have fund balance, in that case, your fund balance is equal to your cash. This doesn't happen very often because there usually are some due to, due froms that are going to be on your balance sheet. There could be some payroll liabilities. There could be some escrow accounts that show up in your liabilities. So it's not always that fund balance is going to equal cash, even if you are a cash or modified cash basis entity. So again, something just to understand when we start using terminology, when we look at our financial activity here coming up, is making sure that we're thinking about the terms we're using. And not everyone uses the same term or defines the term the same way. So it's always good to make sure everyone's on the same playing field. And we'll get into that a little bit when we talk about how we present our financial information to different audiences. And just a reminder, there are different categories of fund balances on your DCED report, which we'll see on the next slides. This does not show up as separate categories. It's all one, but essentially there are different categories of fund balance. Non-spendable, we actually can't spend those items. That's going to be inventory or prepaids. Restricted fund balance, someone from an outside party has restricted those funds. Committed, this is usually where the board has taken action to restrict funds or commit them. That's going to be this category. Assigned funds are really an earmark. So that can usually, depending on your fund balance policy, be management and or the board that's earmarking funds or assigning them. And then everything else is unassigned and essentially can be used on the day-to-day activities. So I kept the DCED reports in here because I did have a couple of questions that came through from the part 1 series on how these transactions look on the DCED report. So just a reminder, this is a snapshot of the balance sheet of the DCED report. There are two pieces because essentially all of your governmental funds are listed here on the left-hand side, and then your proprietary funds, fiduciary funds, and then other items are on the right-hand side. So it is two separate pages, but this is one balance sheet. It's just spread out amongst all the funds. So one of the questions that came through was in regards to the due to, due froms. And so I highlighted here in blue, just so you can see a reminder that due to, due from accounts do need to net to zero. So in this situation, if we go all the way to the total on the DCED website, it will actually, I'll say yell at you, it'll give you an error if the due to, due froms do not match. So if our due from other funds is $100, but our due to other funds is $120, there's a $20 difference there. Again, this is important because when we're recording those transactions, we need to make sure that each fund is in balance, but then also these interfund activities essentially are also in balance so that your due froms equal your due tos. And that's going to be part of that kind of monthly reconciling process, maybe quarterly, maybe annually. Monthly is best if you can do it, So essentially, you're doing your bank reconciliations and then also say, okay, does my interfund activity balance? Does it equal? And who do I need to reimburse to essentially clear that out? Every entity is going to handle that differently, but I did just want to highlight that so there was an understanding there essentially of what that looks like on the DCED report when it comes to due from other funds and due to other funds. The transfers pieces on the revenues and the expenses, I will point that out in just a second here. We did just get a question that came in about the cash basis of accounting and prepaid expenses. So the answer to this is if you are on the pure cash basis of accounting, not modified, but cash basis of accounting, you would not have prepaid expenses because when you pay for something, you record it as an expense. So this is where it can get a little wonky if you're on the cash basis of accounting because timing makes a difference when you're understanding your financials. And that's actually a whole slide that I have that we're going to come up on. But if you are pure cash basis, you don't call it modified cash basis, you are cash basis, you would not have prepaid expenses. Now, if you're modified cash basis, and that's one of the items that you quote unquote modify it for is prepaid expenses, then that's okay. Then you could have prepaid expenses on your financial statements. Now, what's interesting here on the DCED report, since we're here, you can see we have cash and investments, taxes receivable, accounts receivable, due from other funds, other current assets, fixed assets, and other debits. If you do have prepaid expenses, they're typically going to be shown here on this other current assets line item. If you had a prepaid expense that is not necessarily current, the only example that I could say maybe you run into here is a security deposit for a building. So say you've got a 10-year lease on a building. When it started, you put down a $10,000 security deposit. That is considered a prepaid expense, essentially. That's a security deposit or other asset. It's not really a current asset because it would stay over the length of that lease term. So that's when we probably put in these other debits here. The DCED report is a little tough because we only have so many categories. And that's where the interpretation can be different depending on who's preparing it. So sometimes what we'll see is if you do have a situation like that and you're using the other debits row or line, then sometimes on the notes in the back, we'll define what's in there just so it's clear on what's included. The other item that came up as a result of part one was a question on fund balance. And you can see I have the fund balance line item highlighted in a yellowish color there. And so the question that I got is if you had a negative fund balance, would that show up on the DCED report? So if your total fund balance was negative, then yes, that would show up here on this line item as a negative number, meaning if your assets minus your liabilities was a negative number, so that's the top section here minus the middle section, if that results in a negative number, that would show up as a negative fund balance on your DCED report. Where that gets a little gray is if you are used to seeing the normal set of financial statements where we have all of those different classes of fund balance broken out. So I'll actually go back to that. So if you have those full financial statements in addition to the DCED report where you show non-spendable, restricted, committed, assigned, unassigned, sometimes you can have an unassigned fund balance that's negative, but the others are positive. So in total, you have a positive fund balance, but you have one item, and it would be unassigned usually, that is, or an assigned fund balance that would be negative, essentially. Because in total it's positive, it's still going to show up on your DCED report as positive, because really, especially for your general fund, when you're cash and modified cash basis, everything for fund balance is going to go on this line item. Now, if you are full accrual and we're talking an enterprise fund where you are putting fixed assets on the book and you're depreciating those, then we would also be using some of these other lines like investment and general fixed assets. But for the most part, we're not going to concentrate on that area. We're going to talk about really what most of us are doing or most of our situation looks like, and that would be fund balance on one line item. So I think it's very rare that you're going to have a case where your assets minus liabilities is a negative number. It can happen though, especially if you are a smaller entity that relies on tax anticipation notes because of when your funding is coming in from taxes. It's kind of cyclical. So it definitely could happen if your total fund balance is negative, that would show here because your balance sheet has to balance. Your assets need to equal your liabilities plus your fund balance. I'm just going to pause there because that was essentially my overview from part one and a couple of questions that came through. Any other questions on this information before I move forward? Okay, then I am going to move forward and we are going to start to talk about some of the financial, how to analyze your financials, what your financials mean, and what to do with them. Again, please feel free to put in any questions that you have on these slides, and I'll try to get to those as I go along here. So I always kind of get asked, where do we start? There's a lot of financial information, especially if you have, 3, 4, 5, sometimes 15 funds. I know there's a couple of people on this call that have a lot of funds. It can be difficult to understand, okay, where do we start? What do we do with this information? How do we explain it to people? Because we get questioned on it a lot, whether it's in presenting to the board monthly, whether it's quarterly, saying here's where we are versus the budget. A lot of times it's when going through the budget process, preparing for the audit, going through the audit, etc. So the first step is always understanding what your revenue streams and expense categories are. That's really kind of the basis for this whole putting together this presentation. Is it's really hard to start talking about financials if you don't understand how you're recording your transactions, when you're recording them, where you're recording them, so what fund, what buckets, what categories, etc. And then essentially like what that then means, like how did they get there and what do we do with them? So that's really the basis, is understanding what goes into these financials and then what can we expect. So I always like to tell everyone that our financials really tell a story, and stories can be interpreted many different ways. We all know this. You can have board members that all focus on something different. You can have department heads that focus on something different, because essentially everyone has experiences with different items. So if I'm someone who, maybe I'm a retired police officer and I'm now on the board of my local municipality, I'm probably going to focus on the police line first because that's what I'm used to. So that's where it's really important in making sure that those that are involved in any process related to the financials, that's making decisions based on the financials, that is essentially putting the budget together, anything where you're interpreting, need to understand is that those people have the ability to understand what the financials mean. And that's a good opportunity to really say to the board, department heads, other staff that are involved, what questions do you have? Are there items on the financials that you wish you had more information on? Are there areas where some training would be helpful, especially when we have board members that are coming on and off the board every couple of years? You've got this turnaround, you've got new faces. We want to make sure that everyone has a good understanding and is, interpreting everything in as close to the same way as possible. We're all going to have those things that we're going to pay more attention to. But again, that interpretation of what something means is important. And I know we kind of hesitate sometimes, especially for those of us that are working with the numbers, to ask the question, what more do you need? What more information? What can I help you understand? Because that can create more work. But the beauty of it is, hopefully in the long run, we're getting everyone on the same page where we're understanding the information, interpreting it, and then using it for the common goals. And that's a lot about what we're going to talk about, is using the financial information to prepare for the future, as opposed to just focusing on day to day. So, general fund is kind of going to be my basis for the conversation today, because that's what we all are familiar with. We have pretty much all have a general fund, and that's really our day-to-day operations. So, starting somewhere is the key, and that's putting together, maybe there's been, someone in your organization that has been tracking information, has some great spreadsheets or reports out of your GL system, but maybe you're one of those entities that it's kind of just been, we're taking the budget from year to year, we're just entering transactions, and no one's really been analyzing anything. So a good starting point is to kind of say, okay, what has happened the past 1, 2, 3, and up to 5 years if you can, especially in a time right now where we had 2020, 2021 that got a little wonky, and maybe doesn't necessarily look like normal years. If we would just focus on 2022, 2021, and 2020, that's 3 very different years in what was going on in our world, especially in governmental funding and services being provided. So you want to take that into consideration in what years you're comparing, what you're looking at. But usually that 3 to 5 years is a good start. And then you add on each year. And that allows you to kind of look at trends and be able to understand where things have come from. But then again, the goal is going to be to focus on, okay, where do we need to go? What do we need to plan for? So having expectations related to your financials is really the key to starting to use the information. And that's where if you don't have a good understanding of what those buckets of revenue are or what those buckets of expenses are, it's going to be really hard to understand what should be in there, what shouldn't be in there, and to align those with your expectations or even come up with those expectations. But some of the things to be identifying as we go and preparing for are going to be any new grants and funding sources. So if there's any new kind of, ARPA is a huge one that we all experience. So obviously we knew we had an uptick in 21 and 22 for ARPA, essentially related to receiving of those funds, spending of those funds. We're going to see an uptick in revenues and an uptick in expenses related to that information or related to that situation of getting these additional funding sources in. In those normal years, we can have this as well. Have you applied for new grants? Are you planning to go out for new grants? Did you implement any new services that you're providing that's going to have additional funding sources that we need to be thinking about? Tax rates. Obviously, that is one thing that we can control in addition to going out for more funding, but our tax rate increases. Where have you been over the past couple of years? And the number one thing to understand here is when you're looking at increasing your tax rate, what does that mean dollar-wise? And this is really where you should have almost like a little schedule each year that shows, okay, here's our base tax revenue. Here is our current tax rate with our assessed values. Here is that base tax revenue that we expect to come in. Now, that can change because your assessed values can go up, sometimes down, but mostly go up based on if you have any new building in your area. But essentially, that's your base. And then you can calculate, okay, if we increase our tax rate by 0.1 mils, what does that mean to dollars? What additional revenue would we be getting in on the general fund? And that's really where the conversation should be, is understanding, okay, what's the need? Is there a shortfall this year that we're trying to fill? Is it that we're planning for a new building 5 years from now, where we're going to incrementally increase the tax rate over 5 years to get us to where we need to be? So that's really important on understanding the impact of that tax rate increase, as opposed to just saying, okay, we're going to increase taxes by this amount. We want to make sure we understand that dollar value, what that means to us. Any water sewer rate increases, I know this is mainly general fund focused, but again, looking at that, if you're budgeting a sewer fund or a water fund, do you have scheduled increases already planned? Again, what does that mean dollar-wise? If you're looking at increasing your rates by 10%, 5%, what have you, what does that mean dollar-wise? And then again, inputting that into essentially how that has impacted your financials each year. Have your revenues increased solely because of rate increases, or has it been because you had a new development come in and you have a whole new number of customers that have joined the system? So really trying to understand that. Other items that it's good to understand of how your, especially your expenses have been impacted, are going to be salary and benefit trends, and also positions. What new positions have there been? Was there a decrease in positions during that COVID area? We did see some governmental entities have some decrease in their positions, whether it was programming that maybe was on pause, or people making lifestyle changes. So again, those are types of things of understanding, okay, what happened in these years that got us to where we are. A couple of reminders here is your basis of accounting has a large impact on how to interpret your changes. And this is really important when we talk about cash basis, because remember, timing is everything when it comes to cash and modified cash basis. If you don't receive that payment until January, even though it was for the year before, you record that revenue in January. So now let's take, for example, a quarterly payment you might receive from Comcast for cable franchise fees. In one year, you might get 3 payments, and the next year you might get 5 payments, just based on timing. So that's important to understand as well, because if you're looking at, well, why did my revenue significantly increase, or why did my revenue significantly decrease? Timing can be a big part of those discussions if you're on the cash and modified cash basis. On the accrual basis, we typically don't have that come up in the conversation as much, because essentially it's based on when things are earned and when you're liable for things. So even if you didn't receive the funds, we're going to record the revenue and record a receivable. And same if you didn't pay for the expense, we're going to record the expense and record that liability. So just a reminder there, big impact. And then some of these we started to talk about, but one-time items are key to understanding true trends. COVID-19 effects, ARPA and other one-time grants, capital projects. If you've got, if you're only looking at 3 years of information and preparing for the next year, but in those 3 years you had a big capital project that was happening, or in one of them you had a big capital project, et cetera, understanding that before we just kind of say, okay, we're going to use a percentage increase for our expenses, making sure that especially those big projects, they can take time, they can go from year to year, and can have that impact, which essentially want to make sure we're identifying and almost pulling those out as reconciling items. So we're truly understanding what the key picture is here in operations. So what really happened when it comes to day-to-day operations. But on the flip side of that, if you've got a capital project or you've got an ARPA program that you're running, or any other special grant where you've got expenses that are related to that, also kind of looking at that siloed on its own, pulling that piece out for your interpretation to say, okay, what was the effect in total of this capital project or this grant or the ARPA money that came in, we used it here, to also be tracking of that, because that's part of the conversation as well, to identify, okay, what went well, what didn't go well, and what opportunities do we have related to that going forward. So understanding our information is obviously the first part, and then it's what do we do with it? How can this help us? And I think so many times in the government world, we're very just focused on the day-to-day. It's getting the information in, it's making sure things are recorded correctly, it's getting bills paid, it's making sure people are paid. I just had a conversation recently when it comes to the finances, every department of a governmental entity touches finance, touches the numbers. Everything essentially goes through here. So there's a lot of moving parts that we need to make sure are being recorded properly. We've got deadlines that we need to make. We've got payments that need to be made by certain times. We've got funding that's coming in from different sources. So really having that mapped out and that understanding of where things should be going, because that's going to help us identify when something doesn't go right or if we're missing something. And then from that, it's okay, can we get to the point where we've got ourselves kind of set up with a good base of understanding that we can start to look ahead. So it's kind of the picking our head up out of the day-to-day and saying, okay, what do we need to be planning for? And this really goes along with what are the conversations that we should be having, whether it's amongst staff and department heads, with the board, et cetera, as far as where do we need to get to? What do we need to plan for? Because the better we can plan, the less likely you're going to have to do a large tax rate increase in 1 year. Maybe you can plan for it over a couple of years and kind of ease your residents into that, or be talking about that, or looking for new funding sources. That's another one where a lot of times we hear there's just not time. We don't have anyone to go out and look for grant opportunities. So again, if we can be preparing ahead of time and thinking about what are the items that we need to take care of, then how can we go about getting funding for those, looking for grants, or just preparing for them? So really it's looking at cash flow projections and needs. So each year as we're budgeting, and budgeting is the next piece that we're going to get into, we really have an idea of what our day-to-day costs are. So again, looking at general fund, we have a good idea of what our employee costs are, what our services, whether it's police, fire, et cetera, road work. We have a good idea of what those overall costs are. And there are increases that happen each year, there's changes, et cetera. But then how do we take that and look out 1, 2, 3, even 4 or 5 years to kind of project, okay, if we make an assumption, which that's part of this whole budgeting and projection process. But if we make an assumption that says we're going to need to add these number of people in the next couple of years, like positions, we know we're going to have this big capital project. We know that we're going to, need to maybe renovate a building or actually build a whole new building. Maybe you've got a big rec program that you're going to have basketball courts or parks that are going to need significant repairs or work done, trying to schedule that out. And what's interesting is I feel like a lot of times the departments that are responsible for those items, so maybe you've got a road crew or a parks crew, that's on their radar. Like they know, you ask them the question like, yep, oh, in 3 years, we're going to have to pave this, and we're going to have to do that and do that. But it's getting it looped into the finance piece. It's having that conversation that I think often is missing. And that's that whole head down thing. Like, we know what we need to do for our department. We know what our deadlines are. So it's trying to get that conversation going with others, because again, that whole common goal, that whole understanding of what it really takes to run a governmental entity, the departments working together, et cetera. And that's going to help us, like I said, talk about what future tax rate increases are going to be needed, what fund balance reserves are needed, and debt service requirements. So we talked a little bit so far on those tax rate increases, and maybe you're an entity that does a tax rate increase every year. Maybe you're a governmental entity that has not raised taxes for 10 years. We could probably talk for hours on the theory there on which way is better. And your residents would probably have many opinions on that as well. But one area we haven't talked a lot about yet is fund balance reserves. And so there's no set in stone rule here, but a lot of governmental entities that I work with have actually gone to the place of putting into policy a fund balance reserve. So this is typically, I get asked the question, what should it be? Well, it really depends on your entity. It depends on your cash on hand, and it depends on the cyclical nature of your funding. So if you are one of those governments that is cash strapped until your tax revenues come in, I talked about tax anticipation notes before. I mean, they're out there, they're being used because essentially if you don't have a lot of cash on hand in the bank and you're really relying on, okay, all that tax revenue coming in, and we get through the year and we start to run out of cash and we do a tax anticipation note for when our next round of taxes come in to help us with cash flow. That's a whole different story to if you've got already 3 or 6 months or even a year of general fund expenses on hand at any time. And this is where I usually like to say 6 months, 3 to 6 months, I feel like is the conservative response to this, but really taking a look and saying, what if another COVID happened? What if there's a government shutdown? What if there's an issue with tax funds, which we rely on a lot? It very well could be. So where do we feel comfortable of essentially making sure that we have a certain amount of money set aside to keep the government running, to provide those essential services? And this is where usually we're looking at doing it based on 3 to 6 months or even up to a year, where you're saying what is our average operating budget for the general fund. I've never run into this for any other funds in the same way. Usually for capital projects funds, we'll have a capital projects plan that essentially says, and this is one of the planning for future items, that says, here are the items we need to cover over the next 5 years. How are we going to fund it? So we start putting money away to pay for those items. Same thing on like a sewer fund. You might have a capital piece to your sewer fund where, again, you're going to have significant repairs, significant equipment purchases, vehicle purchases related to operating that sewer fund, where you're going to kind of have that capital plan. But you could have a reserve balance for those funds as well. It really is just dependent on your governmental entity. General fund is where we hear it talked about mostly just because of, again, those are essential services that need to be provided to residents. So if, for example, your entity essentially says, we're going to put a policy in place that we always want to have 6 months of reserves on hand, meaning our average operating general fund expenses, 6 months of that, half of it essentially, we're going to keep in reserves. That's good to know and understand as you go through, okay, what is our fund balance? What do we have in excess of that reserve? what deficit do we have essentially where we have not hit that reserve yet, where we need to plan for that. And that becomes part of the budgeting process, understanding that, hey, we need to budget to have an extra $100,000 in the general fund to essentially fulfill our reserve policy, to make sure we have that 6 months on hand. So again, it all kind of goes together in understanding what are those goals and where do we want to get with our financials. I hit on debt service requirements. Obviously, if you are a governmental entity that has debt, you've got an amortization schedule or debt service schedule that says what's going to be owed when between your principal and interest payments. So that's kind of, we'll talk about in our budgeting piece, that's like a known item, but also understanding that, hey, if we are going to need to do a capital project, build a building in 5 years, and we're not going to be able to fund it ourselves, we're going to have to take out debt. What does that look like? And even a couple of years ahead, rates are going to change. I understand pricing is going to change as we've seen, but starting to prepare yourself for understanding that not only is that capital project, you're going to be using money on hand, but you're also going to need to finance it. And then that becomes part of your budgeting as well, because now you've got principal and interest payments that you need to add into your budget and be paying for. So again, just kind of looping that all together. The outside of the cash flow projections and needs is that planning piece where we talked about with capital projects or having an improvements plan. I always say 5 years is best, and then you kind of roll it forward, adding on in each year. If you've got projects that are going to last over several years, that captures most of it. You could always have 6 or 7 years if there's a project you're going to start in year 5 that's going to go on for 3 years if you have to build, like, you know, a major sewer treatment plant or something like that. But again, this is where we have a plan in place, and there is part of that budgeting process on what we need to fund that plan, what we need to get into our capital projects fund, how we're going to be able to fund that, and then what funding sources are there and how do we get there. So again, it's more of that trying to plan ahead and have an understanding of the future. Now, things come up though, and that is important here, is the more we plan ahead for the future, feel like we're a little bit more prepared when those one-time things come up where we've got a sewer line break or something that's unbudgeted that comes up and we need to pull from reserves, or you know what, we've got some money set aside for XYZ in 3 years, we can pull from that right now to cover this, knowing that we've got some time to get that money back in. So again, just that whole picking up our head from the day to day and trying to plan ahead, but having everyone on the same page and having that information shared. Before we get into kind of some tips on preparing our budget, the other thing is analyzing our budget versus actual results. So this is where it's important to understand the budget process. And if you are presenting information to anyone that's not part of that budget process and you're showing them budget versus actual results, this is where it might be a good idea to include some information on here are the assumptions and methodologies that went into this budget. This is what we knew at that time. This is what has changed. And that conversation happens often. That's important to give that information up front to people or to walk them through that, because again, the budget tells a story, the actual tells a story, and budget versus actual tells a whole nother story. So if you have someone that's going to, you know, laser focus in on one area, or the fact that you had a negative variance in this line or a positive variance in this line, what happened here? What went wrong? It's not always that something went wrong. It's just things change. A budget is not perfect. Honestly, it's one of those audit items where, like, if the budget versus actual is almost perfect, you start questioning, like, how did that happen? Because it is an estimate to sort, but we want to make it a good estimate. And again, it should go hand in hand with what our planning for the future is. So understanding the budget process is number one in being able to use that information. If there's no real thought process in the budget and we're just copying and pasting and maybe increasing a couple of things, how do we know it really goes into those numbers to then be able to essentially assess, like, what did go well and what didn't go well? How do we prepare to change that going forward? And just keeping notes. So I always recommend having a budget file. There are several municipalities that I work with that I help them through their budget process. And it's funny, I feel like there's so many variations and lots of notes, but it's just good information, because then we get to July and we'll say, okay, time to start thinking about the budget. we open the budget file from last year and then open our file that we've been keeping of notes of what's been happening, because all of that information is super powerful in helping us move forward. Again, we want to learn from that information and we want to plan. So any like notes that you can keep or information is very useful. And again, getting other departments involved in that conversation. The number one thing that I think I like run into all the time is a lot of times fingers will point towards finance when it comes to setting up these budgets. And finance is a big part of it, but finance, we're not the experts in road work, we're not the experts in police or in park. So it's really making sure that those that should be involved are a part of that process, and encouraging people in each department as it fits to also be looking monthly at their budget versus actual, and keeping notes for when they need to be a part of the process of putting that budget together in the next year. So, always having the right people involved is key. This is one of those items where I feel like it depends on your entity and it depends on how big you are of a governmental entity, but making sure that you've got the right people involved in the conversation is definitely important to have as much information as possible. So a couple of basic items. This is our last section here on budgeting. A couple of basic items to just be, I would say, reminding yourself of, and then also challenging yourself to go through this process. And if you don't have a documented budget process and a documented budget timeline, I really encourage you to do that as your first step. To essentially put in writing to all of those involved, here's the process, here are the expectations, here are the big items we're planning for, because again, you never know how the different departments affect each other and can really help in that planning process. And then making sure that everyone is on board with what that plan is, because these can be a very monotonous activity to go through. There's often lots of variations and variables that go into the budget. And we want to make sure that everyone's time is used efficiently and effectively. And so making it as meaningful as possible. One of the most challenging things is to essentially not just take last year's budget and add increases. So it is more work to start from zero, but this is definitely a good practice for an entity that has not had a very involved budget process in the past, to really say, okay, you've budgeted $20,000 for supplies. What is in that number? Where did that come from? There really should be an idea of what needs to be purchased that year and an estimate of those costs. So you kind of have to think about every account as having essentially a list to it. I'm visualizing a budget that I work on each year, and that's essentially how we have it. Is there'll be a line item and then a list of here are all the things that make that up, and these are the cost estimates. Depending on what it is, a cost estimate could be looking at the year before or a couple years before and essentially saying, here's where we think it'll be. Gas prices is one of those. It's been hard to budget gas prices with increases recently, but essentially we can't go out and get a quote on that. So it's identifying what makes most sense. But there are items where if we have to purchase a new vehicle or something else, we might not be ready to purchase it now, but we can go out and get a quote. And depending on funding sources and how you're purchasing it, you might have to go through a bid process. So again, also remembering that can be a part of your budget process as well. But having substantive information of what that actual cost is going to be, as opposed to just throwing a number in there or carrying it forward from last year. Or the worst part is saying, well, we bought a truck 5 years for $40,000, so we're going to put $40,000 in there. Or say, well, we'll add 10%, when we can actually go out and get an idea of what that is going to cost. And then also keeping in mind that you could have some inflation between now and then. So building that in is okay, but that would be one of those assumptions that I think should be talked about department wide, that essentially says, for these types of expenses, based on the economy as we know, here's kind of the inflation that we're going to use. This is what we're going to assume. It's a 5% inflation increase, kind of having that as a documented assumption. Like as of right now, when we start the budget, use 5% for any price increases. As the budget process goes along, you can change that and making sure everyone's on the same page with that. But that's where it's really important to kind of, again, be making those assumptions and interpretations of that information the same across your entity, because then you're all kind of on the same page and can be interpreting that information as such, because everyone knows what to expect in those numbers. Just again, I know basis of accounting, but a reminder, basis of accounting is everything when it comes to budgeting, especially if you're cash and modified cash basis. We did hit on this a little bit. In addition to identifying your assumptions and any kind of increases or inflation items or new items that you need to discuss kind of across the board with departments, is also identifying what are the items that we know, what are the items that we don't know and we have to estimate. There's a million of these items, but just a couple of items that I put on here. We know what our debt service payments are going to be. Almost always we've got a debt service schedule that's going to tell us. So that number we have. If you've got any union agreements, those terms, whether it's benefits or it's salaries, you at least have an idea. You know what those terms are going into your budgeting process. Positions, if there's no change in positions, you have an idea of base salaries. Now that will come down into unknowns as far as what you plan on doing with any new positions and benefit costs. So we'll talk about that in just a minute. And then your real estate tax base, that assessment, that base level, that's pretty much a known number. You know what your real estate tax is going to be from year to year. It's again, then understanding, okay, if we're going to increase it by 0.1 mils, that gives us this, estimated dollar amount of additional revenue. Some of those unknowns that we talked about are price increases, benefit costs. So we do end up getting our benefit costs or increase late in the budget timeframe. So usually before we are approving or adopting a budget, we've got that information, but for quite some time in the process, we are dealing with an estimate. Depending on who you work with for your healthcare benefits, they might be able to give you like, here's a good number, use 10% for right now. And then once you get into that November or so timeframe, usually you get a better number. That can be different for each entity depending on your healthcare plan, who you go through, timing, etc. But that is one that is a little bit unknown to begin with, and you kind of have to again identify, here's what, especially when presenting the information, here's what's been used to kind of estimate that number as of right now. And then tax revenues out of the entity's control. Oh my, this has been one the past couple of years where with earned income tax and LST and real estate transfer tax, this is one where I think this stems back to a budget discussion that needs to be had at the beginning, is how conservative of an approach you're going to take. Most governments, I think, want to take a conservative approach when it comes to budgeting your revenues and your expenses. Governmental entities, we're not known for being risk takers, and we're stewards of public money, which makes sense. So that's one thing, to really have that discussion on when it comes to revenue and expense lines that really are variable and are out of our control and are based on the economy and are based on what's happening in our area. You kind of have to come to a consensus on, are you going to look at the past 3 years? Are you going to look at the past 5 years? Are you going to look at the years before COVID? And then also reaching out to those that have some more information. So if you work with, like in York and Adams County here, we have York Adams Tax Bureau. A lot of entities here will reach out and talk with them. What are they seeing when it comes to tax collection, where the funds are coming, what things look like? There's no crystal ball, but at least that's getting a little bit more information as far as what they're seeing and hearing from employers. Is there any significant shifts? So trying to reach out to those vendors or other service providers that you're working with to get any of that information. So again, identify, here's what we've used to put the budget together based on what we know right now. It will change, and that's okay. And that's where it's important of keeping track of why we put in what we put in and then what actually happened. So one of the most difficult items then is how to present this information and knowing your audience. So, this could be, as we talked about, the board and committees. You might have a finance committee, you might not, you just work straight with the board, management and department heads, employees, and the public. So the way we present this information is crucial. Again, I always think back to, what is our financial story? What is the story we're telling here? And I don't mean it as a fiction story where we're trying to make something up, but what are the operations? What is happening? What is it that we do? I think there's this like mystification around government sometimes where the average citizen really isn't in tune with all that their township, borough, city, et cetera, is doing and providing them. So that is a big part of taking the moment to explain, this is what goes into all of these operations. And this is what it means when the construction crew is out paving your road. Now, I'm not saying obviously we need to walk through with the public the process of paving roads or filling potholes, but providing that kind of story, that information of this is what it takes. And these are the increasing costs that have happened. These are the positions that it takes. And then where do we need to go? So again, it's using the story of what has happened, how did you get where you're at, to then talk about where do we need to go and why. Transparency is always key when it comes to the budget, especially in a governmental entity. We don't ever want to be at a public meeting, have a resident show up and say we're not sharing any kind of information. It is public information, obviously. But the key I can say here is being prepared to guide your audience through that story, keeping them out of the weeds. And what I really mean by that is additional information can always be provided. Additional analysis can always be provided. But if we just throw like all of the accounts at everyone, that can be difficult, because it can be difficult to bring them back. We've all been in those meetings where we're off on a tangent and we start focusing on these tiny things where we got to start with the big picture first. And one of the things I wanted to show here is kind of how I approach sharing financial information when it comes to budget. This could also be actual budget versus actual. This could be actual for 3 or 5 years. I always start at a higher level. So what you can see here on this screen is these are the DCED categories. And I just literally made this up. This is not from anywhere. But essentially I took those buckets from the DCED report and used this as kind of the starting point. So this is where I would present information, we're going through the 2023 budget process and showing for real estate taxes, we budgeted in 22 $1 million. In 23, we budgeted $1,020,000. That's a $20,000 increase in the budget, a 2% increase. And then I can share where that 2% increase came from. Then I can go to local taxes and so forth, going through each category. Each of these categories could have 1, 2, 3, 25 accounts under them. But this is where they're going to get collapsed on that DCED report. This is how we're reporting to the state. So this is my starting point. This is where I try to summarize everything and then give information as far as, well, we've got a significant increase here because of XYZ. This happened last year. We're planning for this. This is really how I like to kind of tell that story. This is where the backbone is. And then if we need to, we can go into further detail. But this is kind of the starting point that I like to take. Same thing for your expenses. I keep it kind of high level by department. Again, this maps directly to how we report on the DCED report, and essentially to identify, what our total revenues are, our expenses are, if we have an excess or deficit, excuse me, are we planning to use fund balance? If so, what fund balance do we have on hand? Is there any that's restricted? So it all kind of comes full circle as far as understanding what that true picture is, and then again, those needs. And then that's where we can have this conversation that really takes us from, okay, this is what we need for the budget for 23, but then here's also the items that we need beyond that, and what we need to be keeping in our eye, and what we need to be preparing for. And then set honestly some deadlines or action items that say, if you're not already doing it, every quarter be looking at your budget versus actual. Some entities will do it as like a mid-year check-in. We'll say, okay, here's where we're at, budget versus actual, but still providing that information monthly. So it really just kind of depends on, again, your operations and what people are looking for. But that's really, I think, the best place is to kind of start from that high level, but give that information. Don't just give the numbers, because not everyone is a numbers person and can get lost in them. I also find, and I'll say, I've had this come up once, you do need to be careful with colors. There are people who are color sensitive and color blind, But for the most part, I find it very effective to use colors or some kind of marking on reports to maybe draw people's attention. Because again, if I send this report to someone, there's what, 20, 25 lines of expenses, and they're just going to start reading down through. Well, there might be that half of them, really there's no significant change because it's really day-to-day operations, some increases that we've put in at 5% for inflation. But other than that, we're just kind of going to hit on the other half that have significant changes, whether it's buying a vehicle or a new funding stream or increasing tax revenues, et cetera. So I'll usually try to utilize markings like that, like color or something, to say, okay, I'm first going to start on the blue line, and this is what, this is our discussion based on that, and then kind of go from there. I think that was all I had. Let me just jump back to this last slide before before I showed that, and just looping this back to that whole transparency. And I think that's where making sure that everyone who should be included in the discussion is included. And that also falls on your department heads as well. So you might have a budget committee that includes the department heads, but also be making sure that they're also talking to those in their department, because they might be the ones that are day-to-day operations looking at, these are the things that we're going to need, or the things that aren't going well, or the purchases that we need to make. So it might not be that everyone's in the room going through the budget, but making sure that essentially it's understood that if people have questions or have ideas, here's the method of getting that information upward to where it needs to go. And I'll just kind of close with, again, having a true understanding of what's in the buckets, what's in the funds, helps us understand what should be there and what shouldn't be there, identify when things don't go as planned, and then that's going to help us essentially prepare for not only our upcoming budgets, understanding what's happening day to day, but then also planning for the future and looking for those areas of new funding sources or trying to plan ahead as best as possible. So that's all I have. I think we're at 10:59. I did get to cover everything though, which is good. Any questions? I'll wait a minute before we end here if there's any questions. But please feel free to reach out. You can put information in the survey if you have any questions, or feel free to contact me if you have any specific questions about ideas for your budgeting process, interpreting your financials, or what even you should be providing to those that are making decisions based on your financial information. Thanks, everyone.